Okay, so here's the news for this week. Layoffs across the world are going crazy. Massive companies are laying off massive amounts of people. That's usually not a good sign. When people get laid off, they don't run towards assets and go buy them, which is what makes the prices go up. At the same time, banks have started giving credit to everyone. Just there's people without even asking being given credit, which again is not a good sign. Because remember 2008, last time, the reason why it crashed was because people who do not have a good credit, who shouldn't be given a bunch of debt because they can't afford to pay it back, were being given debt just so that banks could maintain themselves. Because remember, debt is what banks feed off of. They're like vultures, and debt is like dead flesh. Sorry for the visualization. The US is coming up with funky ways of messing with their debt ceiling. So if you don't know about this, the US debt ceiling is this fake made up limit that they tell themselves, okay, the government is only allowed to borrow up to this level. And if we hit that level, we're not allowed to borrow anymore, okay? What they keep doing is every time they hit the ceiling, they just raise the ceiling. It's telling yourself, I'm gonna eat this much garbage food, and then when you eat it, you just raise the amount of limit that you're allowed to eat garbage food for. It's not a good way to do it. You will die of a heart attack. The US is gonna die of a heart attack of debt. But now they're coming up with weird rules, figuring out ways to work around that debt ceiling and use financial wizardry to keep the debt ceiling where it is and still be able to borrow more money, which then it's not really a ceiling, is it? Regardless, they're trying to do that, while at the same time, the money supply is shrinking. Because remember, we know assets, crypto, houses, everything goes up when you flood a bunch of money into the system. When that money supply is going down, the money is flowing out of these assets. So the very big picture is the pool, the ocean, like we talk about, the liquidity ocean, the liquidity ocean is going down. So do we think crypto is going to pump? I don't think so. That liquidity needs to be pumped in from that side. Now, up until now, this whole process has been, the Federal Reserve raising interest rates to try to save the world from inflation, which is not working. And people are pretty sure that they're going to stop this process because logically at this point, companies are starting to lay people off, assets have collapsed, there's deflation happening while inflation's happening. Welcome to the weirdo world. And they should stop. Are they going to? Probably not. You know why? Because they're the ones who want to destroy the financial system, because that's how they take it all from us, right? So they're probably going to continue raising the rates, continue breaking the markets, which means continued amount of money flowing out of assets, which means at some point something breaks. So we've been saying this for a while. A lot of the experts are saying the same thing, and I think I agree with them. At the same time, over $2 trillion have flowed into something called the reverse repo facility, which is a simple place where banks park their money and get a bunch of money debt-free or risk-free. But that is also pulling money out of the system, which means, again, it's unlikely that these assets, we're going to go on the next crypto bull run, okay? Money's flowing out of assets, not into assets.